So the laws around the Belgian transaction tax, the beurstaks or taxe boursière, also known as TOB, are quite complicated and confusing. To make matters worse, the laws change regularly. So even brokers are sometimes confused and they charge a different tax rate for the same fund. So this how-to video is going to provide you a step-by-step guide for figuring out the Belgian transaction tax of any ETF. So up first, the first question you have to ask, is it actually an ETF? So the most common ways to invest in Belgium is actually through mutual funds. These are commonly called SICAV in French or BEVIC in Dutch. The second way is obviously through ETFs. So the main difference is that ETFs are traded on an exchange, hence their name, Exchange Traded Fund. In contrast, mutual funds are bought directly from the fund provider. So this is without an exchange coming in between. You can search for a fund's ISIN code in your broker's search functionality to check whether a fund is actually an ETF. Or if the fund is just on ETF, then it's an ETF. So secondly, the second question you have to ask, is it registered in the European Economic Area? So when we've actually determined that we're dealing with an ETF, we need to answer whether the fund is registered within the European Economic Area. The EEA consists of all EU member states as well as Iceland, Liechtenstein and Norway. So fund providers actually list the countries where a fund is registered on their website. The easiest way to get to the right page is obviously through Google. So type in the ISIN of the fund and go to the search result on the fund provider's website. So thirdly, the question we have to ask, is it really registered in Belgium? So we can use the list of countries from the previous step to determine if a fund is registered in Belgium. Fourthly, is there any compartment of the fund registered in Belgium? So a fund can have several compartments. For instance, to provide accumulating and distributing versions of the fund or to offer in multiple currencies. Each compartment gets its actual own ISIN code and the fund provider can choose to register compartments in different countries. So the distributing compartment of a fund can actually be registered in Belgium, whereas its accumulating compartment is not. As soon as one of the compartments of a fund is actually registered in Belgium, the Belgian tax authorities consider all compartments to be registered in Belgium. So this has significant implications for the TOB rate of your fund. Because if a distributing compartment of a fund is actually registered in Belgium, but its accumulating compartment is not, the accumulating fund will still be taxed as if it was registered in Belgium. And the TOB rate is then 1.32% instead of 0.12%, which is an 11-fold difference. The FSMA, so that's the Belgian financial regulator, they maintain a list of all foreign funds that are registered in Belgium. So you can download the spreadsheet. I've actually linked it below the video in the comments, so just have a look at that. But unfortunately, the list does not consist of ISIN codes. That's pretty frustrating. But let's move on to the last but easy steps. This is determine whether the fund is accumulating or distributing. Belgian authorities charge a different TOB rate for funds that distribute dividends, so the distributing funds, and those that directly reinvest them, those are accumulating funds. So you can check whether a fund is accumulating or distributing on just ETF or on the website of the fund provider. The fund or one of its compartments is registered in Belgium. That means that for a distributing fund, the TOB is 0.12% at purchase and at sale. For an accumulating fund, the TOB is 1.32% at purchase and at sale. So the fund or one of its compartments is not registered in Belgium. For a distributing fund, that means the TOB is 0.12% at purchase and sale. For an accumulating fund, the TOB is 0.12% at purchase and sale. So to illustrate this, we actually followed a guide to calculate the TOB for 3 popular ETFs, which I've linked below in the show notes. So do check out for the examples for yourself. On there, we looked at the VWCE, IWDA, and the IESE. So those are like 3 very popular ETFs. So taking into account the transaction tax when setting up your portfolio, it's super important because taking care of this tax is kind of a downside of managing your own investments and buying ETFs directly through a broker. You need to choose ETFs such that your portfolio is actually diversified. So for example, VWC provides great diversification in single fund, but it has a 1.32% transaction tax. So you have to really check, 'cause you're not overspending on broker fees, and brokers charge a commission for every transaction. So broker fees increase when you have more funds in your portfolio. A simple portfolio is therefore preferred. So you need to take this into account if you really want to replace VWCE, which has a high transaction tax, with alternatives that actually have a lower TOB but will result most likely in higher broker fees. And you need your portfolio to be future-proof. Suppose you have a large investment in an ETF and accumulated after many years of investing. You will actually be super unhappy if its transaction tax were to increase drastically, especially if you start selling. So not having to worry about the transaction tax, you could do this through an investment app. There are ways to passively invest without having to worry about the transaction tax. For example, at Curvo, all the taxes are taken care of. Also, with Curvo, each portfolio is globally diversified and has already been optimized for cost. So you don't actually have to calculate the trade-offs yourself. So all I would say is just make sure you go check it out yourself. But to conclude, the rules around the Belgian transaction tax for ETFs are super complicated, but fortunately there is a method to figure it out. However, the transaction tax adds yet another variable to take into account when you're thinking about optimizing your portfolio. It actually makes it harder to find the right portfolio allocation that will give you success over the long term. Using an investment app like Curvo obviously lets you invest passively in ETFs without having to worry about taxes. That's an option. But finally, we would like to also reiterate that we aim to keep the links below with our how-to up to date with the latest tax situation. But obviously we can't guarantee this, so I have to do a disclaimer: always do your own research or seek external advice if the outcome of the transaction tax can have a big impact on your financial situation. All right, that's it for us today. Special thanks to Tim Naisman for his feedback on our guide. Make sure you check the links below and hit subscribe if you want to get more updates like this. All right, thanks a lot.